For years, many Canadians built rental income quietly, deduct mortgage interest, claim depreciation, pocket passive income. But this comfortable setup is cracking. The government is introducing stricter rules on short-term rentals, ACC write-offs on multi-unit properties, and higher capital gains taxes, all between 2025 and 2026. Here's what you haven't heard. Non-compliant Airbnb owners lose all expense deductions, mortgage, utilities, repairs, if they don't register by end of 2024. New CCA for multi-unit builds allows accelerated depreciation, but be warned, losses created can trigger alternative minimum tax. Capital gains hit harder. Gains over $250,000 will have higher taxable inclusion, although implementation now delayed to 2026. These changes aren't small tweaks. They're a tidal wave hitting passive rental investors. First, short-term rental crackdown. Since January 1st, 2024, any Airbnb or VRBO that isn't legally registered by city rules loses the right to deduct expenses. Missed the December 2024 deadline? You owe tax on your full rental income without deductions. Example, $50,000 income with $30,000 expenses becomes a $50,000 taxable gain, adding approximately $12,000 extra tax. Second, MERB CCA reintroduction. From 2025, investors in purpose-built multi-unit residential buildings can again claim accelerated depreciation to create paper losses. Useful for deferring income, but watch out for the alternative minimum tax if losses dip large enough. Third, capital gains inclusion rate up. Gains above $250,000 may be taxed at 66.7% inclusion, up from 50%. But this change is now scheduled for January 1st, 2026. In real dollars, selling a property for a $300,000 gain. Before it was $150,000 taxable. Now over $158,000 could be. That adds thousands more in tax. What you need to do: short-term hosts, register with your municipality before December 31st, 2024. Keep proof. Investors in new rental builds. Run CCA scenarios with your accountant. No AMT risks. Plan capital transactions. If selling, navigate around the 2026 tax increase. Possibly wait or structure sale wisely. And track your rental income and trades carefully. CRA is watching. These rule changes are reshaping passive income for everyone, from seasoned property investors to Netflix-hosted sublets. Did this unveil what's coming for your rental income? Comment "rental ready" if you're getting documents in order. Like if this saved you from painful surprises. Subscribe. Next video: how to legally slash your tax on rental profits under new rules.